You are watching Market Watch, the brief overview of the key events from the world of finance. After the publication of the U.S. inflation report, there was a fairly strong wave of sales of the U.S. currency. But despite a noticeable decline in the producer price index, which reached minus 0.5% in October compared to September prices, the pressure on the U.S. dollar did not increase. Let me remind you that the producer price index sets the rate of inflation. If the cost of goods and services produced increases, then the price of their sale will also increase and vice versa. With a decrease in one indicator, the second will most likely also decrease. Simply put, on Wednesday, investors received confirmation that inflation would continue to decline, but they completely ignored this information. For example, gold, at the time of the release of data from the United States, lost about half of what was achieved on Tuesday. This is a very bad signal for buyers, because even the appearance of a bullish fundamental factor, although not very strong, could not keep sellers from resuming the downward movement. Therefore, the return of quotations under the previous minimum at the level of $1,955 can not only confirm the willingness of sellers to continue the decline, but also provoke a wave of sales. Please note that the next strong technical support area is located in the range of $1905 to $1915. Therefore, the reduction potential is even greater. And now let's move on to the main events of today. Of course, attention should be paid to data on changes in prices for imports and exports to the United States, but after an unexpected collapse in inflation, this release may not receive due attention from institutional investors. Therefore, their attention will focus on data on changes in the number of initial applications for unemployment benefits. Analysts surveyed by Bloomberg do not predict a significant increase in this indicator. Therefore, only an unexpectedly strong deviation from the previous and predicted values can have a significant impact on the dynamics of trading in the US dollar. Otherwise, we will observe a calm in the foreign exchange market. Concluding today's review, let's talk about the recovery of Bitcoin after Tuesday's sales. And although this Tuesday cannot really be called black, many investors and traders, especially beginners, jumped out of this train. But it is important to understand that in the long term, absolutely does not matter what kind of inflation or geopolitical situation, the opportunity to invest in the cryptocurrency market is much more important. We are talking about institutional investors with a total capital of hundreds of billions of dollars. We are talking about the appearance of a Bitcoin ETF. If this does not happen in the coming weeks, the euphoria in the cryptocurrency market may change to aggressive sales. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.